Robert Oudmayer, you are CEO of Cembra Money Bank. Are you satisfied with the result from the first half of 2015?
Yes, we are very satisfied. We increased our earnings, our net earnings was 8% in a very challenging environment. And these are the best half-year results that we have presented as Cembra Money Bank so far.
In July, you announced that you are looking for an acquisition. How is the screening for an adequate target coming along?
Well, we didn't announce that we're looking for an acquisition. We announced that we have excess capital, and we can use the excess capital or for acquisitions, or for extra dividend, or for share buyback. We're interested in acquisitions, but we want to stay in Switzerland. We want to stay in consumer finance, and acquisitions have to make sense for us financially, and also it has to fit into the strategy.
Another topic is the Swiss government that is thinking about lowering the maximum interest rate for consumer credits from 15 to 10%. How would you cope with such a decision?
Look, first of all, we have nothing against the maximum interest rate. I think it's good to have a strong legislation in the market and to have a maximum interest rate. The interest rate was set on 15% since 2003. And I think if you want to lower it or change it, you need to have arguments. So I'm very happy that there's now a study being done by an independent party to look at the effect on the Swiss economy. I think we should wait the answers of that study. We hopefully see the answers in October. And then we should look at what the max interest rate should be, because you have to base it on facts and not on emotions, in my view. The other thing is the max interest rate also has to do with the reference rate, with the funding rate. Today the proposal is to base it on 3 months LIBOR. I don't think you want to have your banks finance on 3 months LIBOR, but on 3 or 4 years rates. So we should see the effect and the answers, and then we should see what the effect is, and if there's a need to lower the interest rate, yes or no, and then when it should apply to our business.
What the government already forbid is aggressive advertisement for consumer credits. How has this decision affected your business?
We have been very active in helping the government to define a self-regulation for aggressive advertising. So we were one of the architects. If you look at our advertising, we are not aggressive. I think we are far from being aggressive as Cembra Money Bank. You see sometimes aggressive advertising in the market, also aggressive advertising to younger population. We are very happy that the self-regulation is now going to be put in place, hopefully by the 1st of January. I think it will help our business because it will probably prevent aggressive advertising in the market, and we are not at all in aggressive advertising as Cembra Money Bank.
You're not only in the consumer credit business, but also involved in the credit card and car leasing field. But your highest potential appears to be in the credit card business. Is this right?
The growth that we have seen in the last years is very much been in the credit card business. We have shown years of double-digit growth in the credit card business, and we still see potential to continue to grow. The other market that we're in, the auto leasing market and the consumer market, are very mature markets where we have a very strong presence. So there it's very difficult to grow, but we are very positive in continuous growth in the credit card market.
We are in a special environment right now with negative interest rates. How long do you think we still have to deal with those negative interest rates?
It's an excellent question. If I would know the answer, I would probably not be here anymore. I would probably on the Bahamas. But look, it's difficult to say. I mean, the way we are funded is long-term. So we are long-term funded, and I think that's more important. I think interest rates will change one day. I have no clue when it will change. Because if you would have asked probably everybody 4 years ago, people would have said it would have changed already, and it still hasn't changed a lot.